We do think Bitcoin is special, and I can get into the reasons
explain
why.
That's a great thing. Yeah.
Well,
Explain why.
Bitcoin is the original cryptocurrency. It's the first one. It's the only one that doesn't have an issuer, right? It's very decentralized. It's, in crypto, they call this the Immaculate Conception. We don't really know how it got here. We don't know who Satoshi is. It's almost mystical, you would say.
Yes.
It's the most valuable one. It has a $2 trillion market cap, and it's the most secure. It's never been hacked, right? So we're now, over 15 years into this journey, and there's been a lot of people who've been skeptical along the way, and there's been a lot of ups and downs. But here it is. I remember back in 2011, I think it's the first time I bought a Bitcoin. I think it was at $120. Now it's at $90,000. Again, there've been all sorts of wild swings along the way, but this thing just keeps chugging along. And you can think of that $2 trillion market cap as like a $2 trillion bug bounty. If there was a way to hack this, there's every incentive in the world. And by hack, I mean like to double spend, create basically a counterfeit Bitcoin, I guess would be the way for people to think about it. And
it
so
is a miracle it hasn't been compromised. I think we can all say that.
Well, I don't know if it's a miracle. I think it's exceptional design.
Sure.
And so I think what you could say is that it's been tested in a very robust way, and there's been every incentive to basically break the encryption, and it continues to chug along. And so I think the price has gone up as the protocol has gotten more acceptance. And this is another point, is that Bitcoin is the most widely accepted as a store of value throughout the world.
Yeah.
So we do believe it should be treated special. Now, that being said, we're also creating the digital asset stockpile. So the reserve is just Bitcoin. The goal is long-term preservation. Think of it as like a digital Fort Knox for digital gold.
White House AI and cryptocurrency advisor David Sachs recently spoke about President Trump's strategic Bitcoin reserve and digital asset holdings, emphasizing their potential impact on the broader crypto market. In a discussion on the All In podcast, Sachs highlighted how this initiative could serve as a major catalyst for market trends in the coming months and years. Stay tuned as we share key excerpts from his latest appearance. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio, and get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains on-chain data, forecasts and expert predictions. All of this is available free of charge. It only takes a moment to sign up, and you can always change your mind later. Now back over to David Sachs and clips from the All In podcast.
We want to put the digital gold in there. We want to keep it secure. We never want to sell it. That's the goal of the reserve. And you're right that we've made the mistake in the past of selling this stuff. At one point in time, we had about 400,000 Bitcoin on the federal balance sheet. We sold roughly half of that for something like $360 million total. If we had held all of that, it would be worth, just that the portion we sold would be worth over 17 billion. So we made this mistake of prematurely selling Bitcoin when we should have held it. We don't want to make that mistake with regard to the rest of it. We think there's around 200,000 coins left on the federal balance sheet, but the truth is that nobody knows because we've never done a proper audit. So part of what this executive order provides is that we're going to do for the first time a government-wide accounting of the digital assets that we actually have. So,
and if digital assets emerge in some department, I don't know, the FBI seizes some, the CIA seizes some, I don't know which organization winds up having them, they're going to be legally required to report that and then put them in the reserve.
Well, they'll be legally required to report it, and then they'll go in the reserve if there's a final adjudication. So, obviously, if those coins could go back as restitution to victims, or if the person who they were seized from wins their court case and gets them back, they're not going to go into the Federal Reserve. But if there's been a final adjudication and a final forfeiture, yes, those will go into the reserve. Anyway, that's Bitcoin. Okay, so then you got the stockpile. Let me just talk about that. So first of all, like I said, we don't know exactly what digital assets the federal government has. I've seen reports that it might have, for example, 50,000 ETH, which is Ethereum. But again, we need to get to the bottom of that. When we figure out exactly what the assets are, we're going to move them into the digital stockpile. The purpose of the stockpile is responsible stewardship. It's a place for safekeeping. It's a centralized, you could say, account under the direction of the Secretary of the Treasury. And the Secretary of the Treasury will figure out how to maximize the values of these holdings. Now, there's a couple of important differences between stockpile and reserve. So one is the reserve, the executive order actually provides that the Secretary of the Treasury will not sell the Bitcoin. Okay, we're prohibited from selling the Bitcoin. There's no such prohibition with respect to the stockpile. If the Secretary of the Treasury decides that's in the long-term interest of the U.S. to rebalance the portfolio or change the portfolio the secretary has the discretion to do that. That's largely fair. I mean, look, I think that the stockpile should be subject to good portfolio management, right?
Excellent.
Unfortunately, we have a secretary of the Treasury who is an extremely successful former hedge fund manager. So he's going to figure out the best way to manage these assets. And we give him the flexibility to do portfolio management. Whereas,
and
like
he has to live and die with what he does. He has to make those decisions, and that's going to be, part of how he's evaluated by the president. So hopefully he's going to be sharp about that.
Right, but the reserve is different, right? The reserve is just digital Fort Knox. Now, there's one other important difference between stockpile and reserve. So with respect to reserve, the EO provides that the secretaries that I'm talking about, Treasury and Commerce, they're allowed to figure out strategies to accumulate more Bitcoin for the reserve if those strategies are budget neutral and don't cost the taxpayer anything. Okay. So it's possible that we could, I'm not saying that we will, but it authorizes them to acquire more Bitcoin if they can figure out a way to do it that doesn't impact the federal budget or the deficit or taxpayers, right?
I think that this is the first week where I've seen the first real schism in how people are interpreting what's actually happening. I think that Trump and Elon were very much in a honeymoon period until this week. And I think there was the benefit of the doubt. But what I saw on X was a real divergence where, on the one hand, there were people that were basically saying, Doge is deranged, Elon is crazy, Trump is lighting the world on fire in one camp, and the other camp saying he's sticking to the plan. And when I thought about this a little bit, if you went back to November the 5th, I do think it's important to remember that we were at this moment where you had this fork in the road and you had all these important issues where I think the best way to generalize it was that the Democrats believed that the lines should continue to be blurred. So whether that was on gender or race or merit versus some other immutable trait, or fiscal and monetary policy, things were just getting more and more blurred. And then Trump and Elon basically showed up and said, actually, we want to refocus and we want to make the lines very visible and clear on all those dimensions. And a majority of Americans voted that in. But I think what you're starting to see now is the difficulty in actually implementing that plan. And what I mean specifically is tariffs are very nuanced and complicated. On the one hand, there's these short-term wins. There's these impacts. You could deem them positive or negative to the dollar. There's impacts to U.S. bonds. There's impacts to U.S. bond markets. There's impacts to how countries deal with foreign reserves. And then there's this impact that happens when the markets react to a tariff. And then Trump takes that off the table and then they snap back. So you have this weird set of boundary conditions right now. So I think right now we're in the very difficult part of sorting through what the long-term implications are. And I can get to some of them later, but I think that's where we are. I think what tariffs allow us to do is rebase the long-term reliance on the US dollar. It allows us to rebase our ability to fund our own deficits. And it allows us to rebase the long-term ability for American companies to be economically vibrant.
I don't sit inside of Trump's head, and I don't have any direct line of communication to folks that are constructing the theory and the policy. If I were to say, what's the most masterful plan in an optimistic way of what could be going on here? What's the master plan? I would kind of craft it as follows. Tariffs aren't being done in isolation. They're being done along with a coordinated policy effort to reduce income taxes and another policy effort to reduce government spending. So those are three actions, three legs on a stool. So tariffs, reduced income taxes, reduced government spending. And they are related to each other. They're related to each other because if we increase tariffs, one element of that is that to import products is more expensive. For example, I buy LED lights in my greenhouse. And the price of the LED lights just went up by 25%. This week, I actually spoke with the CEO of an LED company, and I was like, why don't you guys make the LEDs here? And there starts to become a crossover point where it actually makes economic sense for the company to make the LEDs here instead of sourcing them from Asia. And there's 100,000 examples of this. When the industrial supply chain goes to the lowest part of production, it's going to end up offshoring when there's no tariffs. And if there are tariffs, then you start to do production here. So you're increasing both kind of security for the US supply chain, but also increasing demand and creation of a workforce. Now, I think that the income tax piece is critical here, because in order to make the capital available to build that industry here, we need to unleash capital. And reducing of income taxes, the economic theory would be that capital will now flow into these entrepreneurial activity, these opportunities that have emerged, where suddenly it makes sense for me to make textiles, to make metals, to make materials, to make cars, to make all this stuff here in the United States that I otherwise wouldn't be making. So both the corporate and the personal income tax, by reducing it, unleashes capital that instead of going into the government, it now goes into the private sector, into building businesses.
Okay.
I think that there's another theory about this, which is as you drop the income tax, one of the kind of key theories that I've heard spoken about a lot lately, and I think we're going to hear about it a lot more this year, is trying to get the United States to move away from an income taxation model to a consumption taxation model. So effectively what the tariffs do is there's a tax for you buying certain things. So now instead of getting taxed when you earn money as an individual, you get taxed when you spend money. And some people think that that's both a more fair system and a more kind of economically vibrant system, because that will drive investment in the things that people want to produce because the money's going into production. So
do you think that, Freeberg? I'm curious.
I don't know. It's a really interesting economic theory. I mean, I am not opposed to seeing some sort of an experiment play out where we look at a shift from income taxation to consumption taxation and see if it actually does have an effect on economic growth and productivity. It has not been done in 150 years. There's a lot of economic theorists on both sides of the equation saying this does work or it doesn't work.
Okay.
And let me just say one last thing. By reducing government spending, we are moving workers from the government into the private workforce. So as those new industries pop up, as those investments start to get made in building new industry onshore, where are the workers going to come from? Remember, the government's 30% of the US GDP today. So if that's not a great way to invest money, maybe the private industry is better at investing money and employing people that will unleash the workforce, and it will counterbalance the inflation that we're experiencing. So there's a lot of inflation because of tariffs. And by reducing government spending, that's the offset to inflation. So those three actions, I think, are three legs of a stool, and they actually are all interrelated to one another. So that would be my grand master theory of what might be going on.
Thanks for watching. Don't forget to subscribe to access my free daily crypto updates and expert predictions direct to your inbox.